Applied Digital just flipped the switch on another 100 megawatts at Polaris Forge. The stock's up 226% this year, and I keep getting the same question. Can the stock keep climbing, or are we staring at the ceiling? Well, here's what I know. Right now, the stock trades near 25 bucks, and I'm still not convinced that the market's is priced in what's really happening here, because revenue is up 84% year over year, but net losses are still real and operating cash flow is still deep in the red. And that gap between explosive growth and painful losses is exactly where investors are getting blindsided, I think, today. There's also a signal that I'm watching that will tell me whether Applied Digital is stepping into a long runway or marching straight into a brick wall. And I haven't heard anybody talk about it. And it changes how you value the business entirely. I mean, if it works out, I could see the stock hitting 70 bucks, and I could see it coming faster than you'd ever imagine. Now, by the end of this video, you're going to know whether Applied Digital looks like a buy, a hold, or a stock that you walk away from while you still can. Now, if you're new to the channel, hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter and more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Applied Digital is building the core infrastructure that powers today's AI, creating advanced data centers designed to handle massive computing workloads with greater speed and efficiency. They started out in 2020 with a focus on Bitcoin mining, but as the demand for AI infrastructure surged, they quickly shifted their strategy towards supporting large-scale AI computing. Today, Applied Digital develops purpose-built facilities that give companies the high-density, high-performance environments that are needed for modern AI development, and that's positioning themselves as a key player in the next generation of digital infrastructure. I mean, Applied Digital builds the real estate and power supply where huge AI models live, train, and run, so other companies don't have to build it from scratch. So if AI demand keeps growing, and it will because AI needs to sit on servers that sit in data centers, well, that's the big bet behind the stock. It's the growth. Applied Digital's Compute as a Service, or CaaS platform, is built for modern AI and high-performance computing workloads. It gives clients fast, secure, and scalable access to serious compute power without the burden of owning or managing their own infrastructure. Applied Digital manages the deployment, the monitoring, and security, and it allows clients to rely on enterprise-grade performance whenever they need it. And this setup lets teams stay focused on developing products, training models, and building applications, instead of spending time and resources maintaining servers or running data centers. So companies rent the computing power they need when they need it, instead of spending billions to build data centers and buy the hardware up front. Now, behind the company are 2 main business segments. The data center hosting segment provides the purpose-built, ready-to-deploy facilities that are designed to support large-scale, power-hungry computing demands with consistent performance and reliability. Now, while the high-performance computing segment, or HPC, this one focuses on next-generation data centers, specifically tailored for AI and other advanced workloads. And this is set to deliver the specialized density, the power, and the scalability that all those applications require. So on one side, they host and power the machines, and on the other side, they optimize everything that's needed for AI and high-performance computing, which is where the real growth is. And the key question I've got to ask is whether this mix of hosting and AI-focused infrastructure is ever going to turn into durable, long-term cash flow or just short-lived hype. On November 24th, Applied Digital announced that Polaris Forge 1, Building 1 is now fully energized at 100 megawatts after completing Phase 2, the second 50 megawatt block, right on schedule. Hitting both phases on time is a big deal, and it shows that they can reliably deliver critical AI infrastructure as the demand keeps rising. And this is the first completed building in a fully contracted 400 megawatt campus with CoreWeave. With a new multi-billion-dollar lease secured at Polaris Forge 2, Applied Digital continues to scale fast and build high-density AI capacity at a massive scale. I mean, they're proving they can actually execute, not just sign deals, which is a huge differentiator in this capital-intensive space. But did any of this affect the stock price? Well, let's take a look. The last time I covered Applied Digital, the stock was trading at around $23. Today, it's nearly 25. Now, if we zoom out a little bit, we see that the stock is up 226% year to date and up 156% over the last 52 weeks. And a lot of you have asked on my Discord channel about the same thing, right? So let's have a look, because a stock that runs this hard can either keep ripping if the fundamentals catch up or can unwind fast if expectations get too far ahead of themselves. So first, let's look at the numbers. Applied Digital released its first quarter financials for fiscal 2026 on October 9th, and they reported that revenue increased 84% to $64.2 million year over year. And net losses went down 200% to 11 cents a share. I like that. This just means that the loss per share shrank a lot compared to last year, even as the company kept investing heavily in growth. So yes, Applied Digital revenue is growing, but its losses are still very much a thing. The total net loss for the quarter was $18.5 million, with the discontinued cloud segment actually contributing to a $9.32 million reduction in losses. It means that shutting down that cloud segment actually helped reduce how much money they're losing overall. So that was a really smart choice. From this, we can see that in this industry, scale alone doesn't guarantee survival. Profitability and cash flow matter just as much. Speaking of operating cash flow, Applied Digital posted a negative $82 million, slightly worse than last year's $76 million. But wait, that might seem a little concerning, but there is a catch. The company is still heavy in build mode, and negative operating cash flow doesn't always signal reckless spending. It proves that Applied Digital is actively investing to expand capacity and support its future large-scale growth. I mean, this is classic for high-growth infrastructure plays. Big upfront capex with the hope that long-term contracts eventually turn that into recurring cash flow. Stock-based compensation also swung from a negative $2.9 million to a positive $15.5 million, a big jump, but also typical for companies that are issuing equity as they grow. Net cash decreased by $9.2 million, leaving $114 million in cash on hand. Still plenty of money to keep the lights on. And last year, remember, they just had $86 million. So even though they're burning cash, they're also sitting on a larger cash cushion, which gives them more time to execute before they might need to raise again. Now, at this point, you might be wondering what catalysts could push Applied Digital forward and, of course, drive stronger long-term growth, not only in its top and bottom lines, but in the stocks. And more importantly, whether those catalysts are strong enough to eventually flip this story from high growth, high losses to high growth, high positive cash flow. And you'd be right to ask. Well, one of their big catalysts is their Polaris Forge campuses. On June 2nd, Applied Digital entered into two 15-year agreements with CoreWeave, they're an AI hyperscaler, to provide 250 megawatts of critical IT load at Polaris Forge 1. And these agreements are projected to generate about $7 billion in contracted revenue over 15 years. Then, fast forward a little bit to August 29th, the company finalized an additional 150 megawatt lease, increasing the total capacity to 400 megawatts and boosting contracted revenue by $4 billion. That brought the total to $11 billion. And then on October 22nd, Applied Digital again announced another landmark $5 billion lease agreement with a US-based investment-grade hyperscaler for their Polaris Forge 2 campus in North Dakota. This 15-year deal initially covers 200 megawatts of critical IT capacity with an option for an additional 800 megawatts, unlocking the full 1 gigawatt potential of the site. With this agreement, Applied Digital's total leased capacity signed across Polaris Forge 1 and 2 now stands at 600 megawatts, and it solidifies the company's position as one of the fastest growing AI infrastructure developers in the States. And if all goes according to plan, that's an additional $5 billion on top of the $11 billion from the CoreWeave deal. So that makes a total of $16 billion in revenue over the next 15 years, or just over $1 billion in revenue per year. For a company that just did $144 million for the entire 2025 fiscal year, locking in $1 billion a year for the next 15 years is transformational. I mean, at least now they've got visibility on future revenue that's over 100 times last year's sales, which is rare for a company at this stage. And what I love about this is that Applied Digital has proved their ability to turn highly complex AI factory designs from blueprint to reality with speed and precision. Completing the first phase of Polaris Forge 1 ahead of schedule and completing the second phase on time sets a new benchmark for how quickly and efficiently modern data centers can now be brought online. And it also shows how reliably that Applied Digital can deliver critical AI infrastructure. Execution like this matters, because if they miss the deadlines, they risk penalties, lost trust, and potentially lose these long-term customers. Another thing going for them is their strong institutional support. Institutional shareholders are holding about 66% of Applied Digital's outstanding shares. For example, Mitsubishi UFJ Asset Management disclosed that they acquired more than 30,000 new shares of Applied Digital stock in their latest holdings report. This is on top of nearly 45,000 shares they bought in the last quarter, for a total of 144,993 shares of Applied Digital. In other words, when a major fund has been steadily increasing its position, it signals growing conviction rather than short-term trading. And here is something that I think is really interesting. NVIDIA also holds Applied Digital stock. So when you see hedge funds, large Japanese financial groups, and a major tech company like NVIDIA, one of the biggest companies of all time, all holding Applied Digital stock, it tells you that the serious players believe in the company's potential. That kind of shareholder base can support the stock price when the markets are rough. But it also means expectations are high, so any misstep here could be punished. And that's why it's just as important to look at the risks to the business that could shape the other side of the story, because every company has risks, and ignoring them is usually how us retail investors get hurt. So, first biggest issue I see to Applied Digital, or what they're facing, is that big tech has been starting to do it themselves. Microsoft, for example, has been canceling data center leases in the US, while Applied Digital hasn't been directly impacted by it. It does show that major tech companies are ready to build their own AI infrastructure. And if this trend becomes more widespread, Applied Digital could face tougher competition when trying to secure new clients. If the biggest potential customers decide to self-build, the pool of high-quality long-term tenants for Applied Digital gets smaller. And this brings me to my next concern. Even with new projects and strategic pivots, Applied Digital is still operating at a loss, and those losses have been growing since 2021. And so far, management hasn't said a word about when they're going to achieve profitability. This is very curious. I think it matters because without any clear path to profitability, investors are basically betting on faith that future revenue will eventually cover the losses from today's heavy spending. So with all that, is Applied Digital stock a buy at these levels? Well, consider that a consensus among 5 analysts rate Applied Digital stock a strong buy with a high target price of $56. And that suggests as much as 133% potential upside over the next year. The average score is 4.7. It's remained unchanged for the last 3 months. I say it's almost a perfect score. And I agree. Applied Digital continues to build momentum in step with the rising demand for AI compute, making the stock very appealing to investors who want exposure to infrastructure growth. Their biggest strength by far right now is their long-term contracted revenue. It's signed and sealed with agreements tied to CoreWeave and a US investment-grade hyperscaler. Applied Digital has secured commitments worth about $16 billion. And this provides them with the financials that many developing infrastructure companies could only dream of. And then institutional interests, it just adds further credibility as the hedge funds, the Japanese financial firms, and NVIDIA, they've all taken positions. These investors tend to conduct deeper research before committing capital, which adds weight to the buy case. But I would suggest that investors who are thinking of buying today do proceed with caution and don't forget about the company's ongoing losses and build mode. The growth looks strong, but patience is probably going to be required before the full benefits are reflected in the bottom line. So if you're bullish on AI infrastructure and you can handle volatility and have a longer time horizon, this could be a very interesting high-risk, high-reward position. But what do you think? Do you see Applied Digital maintaining its growth pace as competition in AI infrastructure heats up? Do you think they're going to get the profitability? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it'll help others find the video, it supports the channel, and you won't miss out on my next deep dive. Well, that's it for me today. I want to thank you so much for watching, and I'll see you next time.